Hey everyone, it's Clifton Saunders, your favorite mortgage lender, and I want to thank you again for coming out to our video blog. Today, we're going to answer 8 critical questions that your loan estimate will answer for you. And we'll talk to you soon. All right, your loan estimate is the most important document that you'll see when you're applying for the mortgage. Everyone knows you get this thick stack of papers, but that loan estimate is your true cost of the loan. Everything that explains from what your interest rate is and your closing costs. This form has been simplified from where it used to be back in the days where you used to have a good faith, a truth in lending, and then a HUD statement, and they all look different. The CFPB created this 3-page form to mirror your actual closing statement. So that way, whenever you look at your loan estimate at closing, you can put the 2 documents side by side and you can see how accurate your lender was from the start to the beginning. So that's why it's important, and that's why it's a great tool that I want to teach you on what to look for today. All right, question number 1, how much am I borrowing? That's an easy one right at the very beginning. It's going to break down exactly what your loan amount is. Because a lot of times people get confused with sales price and down payment and mortgage insurance being rolled in. Right there in that form, it gives you a clear answer exactly what your loan amount is under the loan amount. This is how much you're going to borrow, and it's actually on that same page, it's going to show you what your exact cash to close is on that page 1, along with your total closing cost. So very simple and easy to read. Question number 2, what's my interest rate? It's clearly big and bold, clear as day, right then and there, what your interest rate is on your loan estimate. And it's going to say interest rate. You know, and the rate that the lender's giving you is what you're getting, unless that box is checked that says it's floating. So keep in mind, whenever you get a loan estimate, you want to find out if it's been locked in or if it's floating. And the difference is sometimes people will say, hey, I want to wait to see if rates get better. And so they don't lock it in. So keep in mind, once you do lock it in, your lender will give you another loan estimate, and then you're going to be looking for that box that says it is locked. Question number 3, what's my monthly payment? Now, what this document also shows you is your exact monthly payment. It breaks down what your principal and interest, that's what gets paid to the bank. It breaks down your taxes and your insurance, which gets paid out to the third parties, and any mortgage insurance or HOA dues. Generally speaking, keep in mind though, your HOA dues will not be included in your monthly mortgage payment. And the good thing about the loan estimate, it does show it clearly as day that that's not included with the payment. So it breaks it down very easy for you to read it, so you know where everything is going in that monthly payment. All right, question number 4. And this one right here, there used to be a second rider for it. This one says, is my rate fixed or adjustable? So back in the days, the old form wouldn't show if it was fixed or if it's adjustable, but then you had an adjustable rider. This one clearly lets you know if your loan is an adjustable rate or a fixed rate loan. In my opinion, always get a fixed rate loan unless you're an investor. So make sure you check that out on the loan tab that says, can this amount increase over the time or over the closing costs? And you want to make sure that that does say that it is a fixed rate payment. Question number 5, what are the costs of taking out a mortgage? There's so much misconception out there. And really, there's only one fee, a couple fees that you really need to shop for. And what that is when you're looking at your fee, your lender is going to clearly show what their origination charges are. You know, what their application fees are, underwriting fees, and things like that. Those fees typically can range from 0.5% as high as 2%. You know, but the best deals normally are you're going to get about $1,500 or less and a one-time fee or a fixed fee up front. So make sure when you're looking at your fees, you're looking at the overall fees, because the rest of the fees that you typically see are estimates for third parties that your lender has no control over. And sometimes you can still shop for insurances and title companies and things like that. But the main one that the lender's giving you is you want to know what their fees are up front without any hidden agenda. And that's what that loan estimate will show you. Question number 6, am I being charged points? That can be construed a couple different ways. Now, sometimes you'll hear banks will charge an origination point. Not all banks charge that, like we don't for the most part as well. But also you can be paying points which are considered discount points. What that means is, hey, I know I'm going to be in my house for a long period of time. Can I pay a little additional fee to reduce my interest rate now, which will then save my payment over the life of the loan, save me a lot of money in interest. In many cases, it is a good idea to buy down your rate if you know you're going to be in your house 8 years or more. However, if you think this is your first house or you're an investment property or you're only going to be there less than 7 years, it may not be the greatest option and it may not actually truly save you any money. All right, question number 7 is how much am I paying for an appraisal? Most appraisals are usually going to be paid in advance from the borrower because, of course, the appraisers nowadays want to know that the house is worth it before you can close, and banks want to know, so they charge in advance for that. And a typical appraisal fee runs anywhere between $500 to $700. Just matters if you're buying it as a primary residence, you'll usually see right around $500 to $550. If you see an investment property, it can be upwards of about $650 to $800. Just matters on what's required. And in most cases, your lender will probably ask you for a credit card in advance, so that way when it's time to order the appraisal, they'll usually charge you directly for it. Now the final question is question number 8. How much money do I need to bring to my loan closing? All that is going to be broken down on a loan estimate and shown on page 2. So that way you see exactly the total out of pocket, including down payment, closing costs, appraisals, and then of course they'll minus any credits that you paid in advance, like we previously talked about the appraisal, or if the seller paid any closing costs, that'll come out. So this will break down your exact amount. So I get a lot of people sometimes are confused. When you see that page and it gives you a dollar amount, in most cases, your lender should be within $300 to $400 of that amount on your loan estimate to your number on your cash to actual close. So that's why it's very important for you to compare those two. So I've seen it before where I've been off by no more than a quarter, which is very rare, but a lot of times if you got a good lender, they're usually going to be within $300 to $400, so you don't have to worry about that. But you at least know the exact amount you have to have ready for the day of closing. All right, everyone, thanks again for watching my video, and I hope these 8 tips helped you. And I hope that if you know anyone that these tips can help, that you would forward, share, and subscribe my blog up above, or forward it to a friend or family member that you think this might help. So thanks again for watching, and as always, me and my team are here for you if you ever have any questions or any needs. You can reach us at 281-930-7775, or reply to this email, or post on our blog below. Thanks again, and y'all have a blessed day. Bye-bye.